So based on the title of this video, you know that I'm going to be talking about Alibaba stock today. And I'm going to show you exactly how I was able to make 50% profit on this company in just 3 trading days. And no guys, this isn't clickbait. I actually did make 50% profit. I'm going to show you the numbers here. It's going to make sense. And the purpose of this video is not to show you that, oh, I made 50%, look at me. It's more to teach you about how you can replicate this with your future trades, your future investments, and how you can really take advantage of irrationality and fear in the market like we've been seeing with Chinese stocks, specifically like Alibaba recently. So if you don't mind, take a second, hit the like button down below, helps the channel tremendously. And if you're new here, hit the subscribe button. We'd love to have you part of this community. So how did I make 50% profit on a Alibaba play here in just 3 trading days? You can see from the absolute low point that the stock hit last week, it's only up around 12.8%, which is nowhere near 50%. So how was I able to pull this off? Well guys, I used the power of options, but it wasn't really a gamble shot in the dark. It was a pretty calculated bet, and this is exactly how I did it. Last week I told you that I sold some put options in Alibaba stock, and I picked the October monthly options with the $125 strike price. All this means that I'm placing a bet saying that by October 15th, which is when the option expires, I believe that Alibaba will be worth at least $125 per share or higher. As long as that's true, I win on this option. However, what if it goes against me? What if Alibaba is below 125 per share? That's fine. I can either roll out the trade in duration, I can give myself another few weeks or months or whatever it is to make sure that I am right eventually on this trade, or I could just take assignment of those shares and own Alibaba at 125 per share minus a premium collected. Third alternative, which is an option, but I try to avoid it if possible, is just close the option out at a loss. That's also something you could do. But now you may be wondering, why October and why the 125 puts? How did I know that this would be a good option strike to pick and give myself some pretty good breathing room just in case things went against me? Well, if you look at the charts again, Alibaba has strong support around this 125 level, guys, and ever since it broke out, it tested this level right away and then it rallied hard. Then it came down in late 2018 due to the trade tensions that we saw, and once again it found strong support at this level, bounced off of this, and went higher. So, using this historical data, I was willing to place a calculated bet that if Alibaba continued its free fall like it did last week, it would find some sort of support around this $125 mark once again. So that's why I picked the 125 strike. But why did I pick October? Well, there's a couple reasons why I like the October expiration specifically for this play. The first is because I wanted to collect as much premium as possible in a reasonable amount of time frame, and I figured that I could go with September, but it's fairly close. Play could go against me and I won't be collecting as much premium as I'd want. So I look at October. Premiums were good. I was collecting near $4 per contract, which of course equates around $400 per contract because each contract is 100 shares. And I felt comfortable with the risk reward for that. Now, another reason I picked October is to give myself enough time for theta to also work in my favor. If you didn't know, options lose value every single day. Ideally, you want to get it out, 1 to 2 months out so that you can get as much theta decay as possible. So that way you have another thing in your favor here that could contribute to a win. And finally, another reason that I picked October was to give myself time for the implied volatility to kind of die down a little bit. Everyone was fearful of Chinese stocks last week, which meant that the IV on these stocks were through the roof, which is why premiums were so high. As fear kind of builds up in the market, everyone's fearful, they want to sell. These options, put options specifically, they go up quite a bit. More often than not, they go up irrational amounts, and then option sellers like myself try to take advantage of this. So I pick in October, I give the stock, I give the market some time to cool down, take a breath, and that'll help IV come back down. And as IV comes down, I'm sure you've heard this term before, you see IV crush, which means that the option prices, the premium there drops significantly. In regular markets, regular stocks, non-Chinese stocks right now, you'll see IV crush happen quite often after an earnings report or some sort of binary event where there's a lot of hype and a lot of unknown up until a certain point, and then that event happens, and then boom, the next day IV is typically crushed massively. So if we look at the option pricing here for Alibaba, we can see that premiums got crushed here on the put options today as the stock rallied, as there was less fear now in Chinese names, people starting to get bullish again, people wanted to buy the dip, and this just means that the puts that I sold became extremely profitable today. So I saw that I was up 50% or so on this position, and it was good enough for me for 3 days of holding. So I took the trade off the table. I realized those gains. If you recall from my previous video last week, when I sold these options, they were going for around $4 per contract. So I sold them at that point. And then today I bought them back at under $2 per contract, realizing around a 50% gain. The reason I chose 50%, guys, is because from what I've learned, at that point, the risk reward just doesn't make as much sense anymore. And when you see profits like 50% in just a few trading days, you better take that off the table, don't get greedy, and live to fight another day. Use that capital for another play. Sure, I could continue holding. Sure, I could hope to squeeze out some more profits here in coming days. I don't think Alibaba has done its upward move yet. But to me, it was a good enough profit that I was willing to just be happy with it and move on. Now, there are 4 key takeaways that I want to share with you from this trade here so that you can kind of use this to replicate for future trades for yourself. And a lot of this is from mechanics that I've learned from Tasty Trade. So the first thing I want to do is look for elevated IV or IVR. You want to see stocks that have high levels of IV, because not only does that mean that premiums are more juicy, but that also means that you can go further out in the strikes and still collect a good amount of premium, which means in the end, you're really improving your risk reward because you're pretty far out. So chances are you're probably going to be right with your trade and you get to collect a lot of premium for it. The second thing is to sell options as close to 45 days to expiration as possible. Like I said, this one was in October, so it was over that 45 days, and I let data and everything else work in my favor. And if, for instance, if this didn't come in as soon as it did here in just 3 days and Alibaba was still kind of moving sideways or moving lower, I'd have plenty of time for the trade to reverse and still work out for me. The third thing I want to share, which is kind of my own thing, is to pick strikes around strong support levels. So like I showed you, 125 around that level was a strong support for Alibaba. It's proven to be in the past, and I was willing to bet that it would be again this time around if we came down or tested. So I was comfortable selling options at around that point. And the last thing I want to share with you is just don't be greedy. When you see profits like this, take them off the table. Sure, you can squeeze out a bit more money here. Sure, you can let it ride for longer and realize a 60, 70, 80% profit. But, something could happen tomorrow. Fear could come back into this stock and those option premiums could shoot up once again, which, would pretty much evaporate that 50% gain. So what I've done here by taking this off the table is I'm giving myself the opportunity to re-enter this trade if we see fear come back in. I typically will take off positions anywhere between 20 to 50% profit, depending on how long I've been holding it. And I'll say that Alibaba here was one of the better plays because it just happened so quickly. Everything worked out exactly like planned. So I'm not going to be greedy here and I'm just going to enjoy the gain. So anyways, guys, I hope this video gave you some insight on how I was able to achieve this and hopefully taught you something about options here and how you can kind of use the market irrationality and fear to your advantage in future instances. Again, this was a specific issue with Alibaba, so it made it very easy for me to go in, pick a strike, and be comfortable with it. And sometimes you see the broader market correcting and option premiums rise across the board. And in those cases, it kind of gets a little bit tougher as to where you want to really deploy your capital. But, it's a good problem to have. I'm not complaining. And if you want to get into option selling, you definitely do want to see nice, juicy premiums with elevated IVs. So if you're interested in, what trades I do on pretty much a regular daily basis here, I share them in my Discord for my VIP members. So check out that group, link description down below. Try it out. I'm sure you'll learn a ton in there, and it will definitely be worth your time. And also as a side note, guys, I am still holding my Alibaba shares. I'm not selling those shares. I'm still going to keep holding them for a very long time. And like I said in my previous video, I do still plan to buy a little bit more at these prices. Anyways, hope this video was useful. If it was, again, hit the like button. Thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one.